Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Tuesday. In today's program, I want to talk about some exciting prediction for Netflix, some more doom and gloom warnings, and some interesting economic data coming from the UK and what it actually means. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever shall be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So, like I said, like this video was called, Netflix is potentially set to make billions, apparently, in the next coming years. And the reason for this is JP Morgan estimates that Netflix will generate around about 2.65 billion in advertising revenue by 2026. As you know, they're about to start their new ad-supported tier of their subscriptions, where for a lesser fee, you unfortunately have to have advertisements. Of course, this would generate income from those who place advertisements with Netflix. And this is supposed to be quite popular. This is actually going to be launched in the US and Canada quite soon. And then they actually believe that Netflix's ad-supported tier in the US and Canada regions will drive 600 million in advertising sales in 2023. So a very healthy margin indeed. In fact, because of this, even though they disappointed slightly with their earnings, they lost 1 million subscribers in their last earnings. Their share price, though, has risen by 19% over the last 3 months. So anyway, that's quite an exciting development for Netflix. Don't forget, Disney's overtaken them now as well. So this could bring them back to the top of the tree, potentially. Keeping with JP Morgan. JP Morgan Chase CEO Jamie Dimon has warned that stocks could drop by another 20% if interest rates keep rising. In fact, he said this drop, when it potentially happens, will be a lot more painful than the first drop. He goes on to say, more happy news, I'm afraid. He goes on to say, these are very, very serious things, which I think are likely, and he's talking about the Fed here, raising interest rates, very serious things which I think are likely to push the US and the world, I mean, Europe is already in a recession, this is what he said. And basically, what will happen, it will push us or put them, I'll complete this statement, and they're likely to put the US in some kind of recession in 6 to 9 months' time. So again, a pretty scary warning. Don't forget, he did say a couple of months ago that we're about to face a hurricane in economic turmoil. So he's a very happy chappy indeed. He probably is a very happy chappy, probably a nice chap, but his predictions and his forecasting to the state of the US economy has always been quite scary. Anyway, moving on across the pond to the UK. UK unemployment surprised many people today and was announced at 3.5% versus 3.6% expected. And this is actually the lowest level since 1974. However, the reason for this drop is the economic inactive individuals. There's a large number of economic inactive individuals. These are people who are not looking for work or not working due to long-term sickness. And it's actually increased to a record high. In fact, in the last 3 months to May, number of people classed as inactive rose by 252,000. And that's the highest level on record. So though it looks good on paper, it's due to the fact that people are actually not going to work anymore, or a good number of people aren't going to work anymore. Same for the United States as well. The United States unemployment, that's down to that as well. And the other worrying thing which came out at the same time, and we'll look at the market, we'll look at the cable in a minute, is of course the claimant count. Now, claimant count is the number of people signing on for unemployment benefit for the first time. In fact, it's usually done as a negative, and it actually came in as a plus. So 25,500 people signed on for unemployment benefit. If you actually look at the estimation, it was 11,000, negative 11,400. So that figure of unemployment benefit is actually higher than 25,000. So that is worrying because don't forget, like I said, with the US initial claims, they're like early warning systems, like a canary in the coal mine. They give you an early warning of where the economy might be heading. So that's a very worrying number indeed. More worrying. I know everybody's talking about the unemployment number today, but it's that I think is more worrying about things to come for the sterling and come for the UK economy in particular. And because of this, not just because of this, BOE has obviously intervened again on the bond market. The cable is set to fall for the fifth straight day in a row. Fifth straight day in a row. So anyway, let's have a quick look at the markets now and start off with the cable, which is the British pound US dollar. As you can see, okay, this is on a daily. This is the fifth day we're looking at losses again after 7 days of recovery last week. So it's currently trading 1.1049 under that key level of 1.12196. And don't forget, like I said already, we've got the UK GDP coming in tomorrow as well. So that's going to be an interesting figure. And the market is really pricing in at the moment another 100, well, not another, but 100 basic point rate hike by the Bank of England, to face obviously raising inflation. So it's very, very gloomy. The mortgage market as well. Santander UK, while I'm thinking about it, they put some money aside today over the last day or so to protect against people defaulting on their mortgages. So this is why we've got a lot of pressure on the sterling in particular. Like I say, it's really that 1.08 handle for me. That's the level I'm keeping an eye on. Like I say, but that really the key resistance for that is 1.12196. Let's look at the euro as well. The euro is not having a good day. Slightly favouring slightly better than the sterling. Under that key level, though, of 0.99951. Currently trading at the moment at 0.9609. EU data this week really only got Germany's CPI really to keep an eye on. Let's have a quick look at the dollar yen, because this is looking interesting to me as well. Look at the 30 minutes, okay? Because obviously, we have got dollar strength as we know. It's currently trading at 145.68. But this is around this region. When the Bank of Japan last intervened on the FX market, forcing the dollar downwards against the yen. So this is an interesting area. At the moment, they haven't blinked. But questions are, is it only a matter of time until the BOJ intervenes again? Gold-wise, gold currently trying to break that key level, which we put in, $1,667.86. With bond yields still increasing and with a strong dollar, the gold is struggling to try and get its momentum back. But really, we need to keep an eye on $1,667. Let's have a look at Bitcoin as well. Bitcoin, we look on the daily, still really much in this range, which we've been looking at for a while. Trading between a potential resistance of $20,355 and that key support of $18,438, currently trading at the moment $19,071. S&P 500, let's have a quick look at that as well. Okay, again, looks set at the moment for also a fifth day of losses, currently trading at 3,582 points. So yeah, again, we still have pretty much risk-off appetite. Dollar strength still the same at the moment. Because like I said, after that job number on Friday, the markets accepted that there's going to be no dovish pivot from the Fed. At last, they've accepted it, because I've been saying that really. But really, the build-up, of course, is to what's happening in 2 days' time. Like I said, we've got UK GDP tomorrow, FOMC minutes tomorrow. That's going to be interesting as well. German CPI, but it's the US CPI. It's all about the US CPI. That potentially is going to be a massive event, and that is why I'm going to be doing a watch-along on that event at 12:20 p.m. UTC. So please come and join me for that. Don't forget that. As well as that, Friday, we have the real kickoff of the earnings. JP Morgan's, Wells Fargo, Morgan Stanley, and Citigroup, some of the biggest banks in the United States, all releasing their earning report this Friday, and that's going to be fascinating as well. So please, and it's all quite a few of them before the open as well. They'll be releasing that, but we'll talk a bit more about that. Sorry, folks, read right. Talk a bit more about that closer at the time, because like I said, the earnings season. What will it show us? What will it show us? Indeed, European equities, as they currently stand, FTSE in the red, slightly negative 0.2%. DAX currently trading also in the red, a negative 1.05%, and Euro Stoxx 50 currently negative in the red, 1.01%. So all pretty doom and gloom, really. Okay. What are your thoughts on the BOE buying more government debt? Well, they're buying they're buying bonds at the moment to maintain the pension market, to support it. Like I say, they had to, because don't forget, on Friday is they stopped doing it. They stopped this emergency program. So they need to realistically try and support the market. But they don't seem to be doing it. They did it yesterday. And initially when they did the emergency program, it calmed things down, but it's not so calm at the moment. That's why the bond market is still under pressure. But they had to do that. They had to jump in with the bond market, intervene twice. Yesterday, they increased their bond size, and they carried on increasing their bond size today. In fact, they spent the biggest amount on bonds yesterday. They have done since they put in this emergency program. But an interesting question, good question. Any other questions at all? Don't forget, you can ask me questions anytime you wish, or share me your opinions. Let me know what you think is happening in the market. Let me know what you think about the sterling at the moment. Or tell me what you're trading. Tell me what you're trading, or what you're interested in. I mean, at the moment, the headlines, obviously it's the European session, so it's the sterling, the euro is going to be taking the majority of the headlines, especially with that UK data this morning, having a mixed bag. And obviously the BOE intervening again, or increasing their intervention again. And like I said yesterday, I wouldn't be surprised if the Bank of England expands its emergency bond buying program. Yes, I do. That's a very good question. Do you think they would be more aggressive on the next interest rate announcement? Yes, I think they will, because there's several reasons for this. Okay, several reasons. For one, they've got to try and clean up after Trust's government, what the UK government did last week with the mini budget. Plus, once we see a bit more details on how they're going to pay for that, don't forget the government releases out on the 31st of October. The interest rate hike comes after in November. If they're comfortable with that, then they will be more aggressive. Because like I say, they think inflation again is going to be about 11% this month in the UK, so they need to be more aggressive. On the plus side, they also will be a bit more confident because average earnings is still gone up slightly. So they think that obviously people can afford to, basically weather higher interest rates. But yes, I really do think they'll be more aggressive. Like I say, rumors are, and expectation is they could go as far as 100 basic point rate hike. So that could surprise the market a lot. But very good question. Again, thank you. Any other questions at all? Okay, thank you for the questions, though. Brilliant. Don't forget, if you think of a question later, you can put it in the comments section on YouTube or Facebook. I will see it, and I will reply to it next time I go live on air, which will be later this afternoon, of course, at 2 p.m. UTC to discuss the US session. So please feel free for that. If there is no other questions, not a problem. If you're watching me on Facebook and hang on. 50 doesn't seem, no, it's not aggressive anymore. They did 50 last time and it was considered dovish. It's considered dovish. And like I say, it's a crazy time we live in when a 50 basic point rate hike is considered a dovish move. So no, I think they'll definitely be more aggressive this time. But a good point. Very good point. Like I was saying, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and enjoyed this little video, by all means, subscribe if you like. Hit the notification button so you know next time we're going live. If you enjoyed this video, found it interesting and useful, and you put up with me, my over-the-top enthusiasm for the markets, which I simply just cannot help, then give me one of these. It's nice to know that you like what I do. But anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. So I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.